Have you ever earned money from a side job, freelancing, or investments, and wondered how it impacts your taxes? You might be thinking, do I need a special form like a 1099 for this type of income? The direct answer is no. You do not always need a 1099 form to file your taxes, but you absolutely must report all your taxable income. The Internal Revenue Service, or IRS, requires you to report every dollar you earn, whether or not you receive an official form for it. A 1099 form, often called an information return, is typically sent to you by a person or company that paid you money for certain types of income. For example, if you worked as an independent contractor and earned $600 or more from one client, they are usually required to send you a Form 1099 NEC, which stands for Non-Employee Compensation. Other 1099 forms cover things like interest income, dividends, or even certain government payments. These forms help the IRS track income and ensure taxes are paid correctly. However, if the amount you earned is below the reporting threshold, or if the payer simply does not issue one, you are still responsible for reporting that income. So what should you do if you have income but did not receive a 1099 form? First, if you expected a form, contact the payer directly and request it. If you cannot get the form, or if the income was below the reporting threshold for a 1099, you should still keep good records, such as bank statements, invoices, or payment receipts. You can use these records to accurately report your income when you file. Many types of income without a 1099, especially from self-employment or the gig economy, will be reported on a Schedule C, profit or loss from business, which is then attached to your Form 1040. Understanding the different types of 1099 forms, like the 1099 MISC for miscellaneous income or the 1099 INT for interest income, can help you keep track of your earnings. Knowing that the IRS receives copies of these forms helps you understand the importance of reporting everything accurately. Even small cash payments for services or goods, which may never generate a 1099, are considered taxable income. Ultimately, the goal is to make sure you report all your earnings to the IRS, regardless of whether a 1099 form is involved. Being proactive about tracking your income and understanding your tax obligations will help you avoid potential issues and ensure a smoother tax filing process, giving you confidence and peace of mind.